So as you guys know, the topic for today is reviewing 2023. It's been a very eventful year in crypto, lots of ups and downs, though mostly ups. So we'll cover some of the key trends, summarizing crypto for the year. First, big picture overview, and then more into the key sectors defining the growth that crypto has seen in 2023. Before that, as usual, we want to give a quick update about what we're doing at Into the Block. So about 2 months ago, we launched this new section within our analytics product called Into the Block Perspectives. They're very detailed dashboards into some of the key topics, catalysts, narratives, however you want to call them, within crypto. Just today, we announced the launch of the Defi exploits dashboard. We believe it's the most robust set of analytics covering DeFi exploits. I'll have some of these metrics throughout the presentation, but feel free to take a look in Twitter. I wrote a thread with some of the key metrics here and how exploits are actually going down over time. Then last week, we also launched the Perspectives dashboard on the Bitcoin ETF tracker, which of course is one of the main topics of the year. And it'll allow you to track some of the applications when they're expected to go live, the AUM of these entities, and the comparison also versus the futures ETFs that are already live. We also launched an arbitrary incentive program tracker for Perspectives, which is quite interesting. I recommend checking out. And outside of the analytics product, we launched for our risk product that is still on the alpha phase, Tashi, which is a lending protocol on Evmos, the EVM compatible chain on Cosmos. So we have a full coverage of the key economic risk factors that anyone should pay attention to if they're using Tashi and DeFi in general. So now let's go into the big picture of what happened in crypto in 2023. If I would have to summarize it in one word, I would say resurgence is the best word describing crypto in 2023 across several dimensions. One, of course, prices, whatever, the item that most people care about, frankly. It has manifested within the markets. So we have seen an increase in prices. I'll cover a bit more in detail now. We're also seeing positive catalysts. So a lot of key events, launches, and narratives helping push the space forward. And importantly, also improving fundamentals. So a lot of the key metrics defining, the success and the inherent value that these networks have been trending upward, and it's not just price activity. So in terms of prices, we've seen multiple assets do 100% plus this year. Notably Bitcoin 140% over the past year, Avalanche a bit higher, 195, so almost tripling, Cardano basically doubling, Ethereum up 75%. Dogecoin and Shiba Inu have been lagging, and notably missing from here, Solana, which has been doing about, I believe, 600% up this year. I'll talk a bit about that a bit more in detail later. Now, let's dive into the more in-depth metrics. In terms of catalysts, there are quite a few, both internal and external factors that have been pushing crypto forward in 2023. So a lot of the downside we saw in 2022 had to do with macro factors pushing crypto down. So liquidity was leaving the system as rates increased, and the opportunity cost of deploying in crypto or risk assets became worse relative to deploying in bonds as rates went up. That being said, inflation peaked in the late summer 2022, and the vast majority of rate hikes were during that period. So they were quite fast, and the marginal increases became quite slower. And that's important because the markets react on the margins. So as that increases became slower and now has been stalling, in an hour, we should hear also the Fed keeping rates at where they are. That encouraged activity to come back into risk assets, including crypto. It also helped liquidity conditions improve. So here's a graph comparing Bitcoin price versus USD liquidity index, which is basically the treasury, the Fed's treasury assets, minus the reverse repo program and the treasury general account. So it has been closely mirroring that and at many times anticipating in advance. And post the Silicon Valley Bank collapse, we also saw a very large inflow in liquidity that helped push crypto forward, especially Bitcoin. And that's been also coming back in the past few months. Then going into internal catalysts pushing the space forward. At the beginning of the year, the main one was arguably Ethereum's Shapella upgrade. So Ethereum launched the Beacon chain and staking back in 2020. And up until now, so 3 years later, basically, no one could withdraw assets from the staking queue. So it led to a lot of early believers, mostly deploying into Ethereum staking. And this April, the Shapella upgrade enabled people to be able to withdraw ETH staking. And there was a bit of thought at the time that it would cause mass withdrawals within Ethereum staking. And in retrospect, zooming out, it seemed that to have been just a glimpse where Ethereum staking dropped about 5%, I believe it was, and quickly climbed back. So in effect, it actually accelerated by de-risking Ethereum staking, leading to more staking, making the network more secure, and also less ETH available to be staked. So overall, a very positive outcome for Ethereum. And then, of course, we see the third largest catalyst, and probably arguably the main one within crypto, which is the BlackRock ETF application. We have been saying, institutions are coming, and this is like the final stamp of approval. Bitcoin ETF applications for Bitcoin spot ETFs have been going back since 2013, when the Winklevoss twins first applied. And finally, seems like we're getting spot ETF approved early next year. Bloomberg analysts give it a 90% chance of approval. And particularly BlackRock, which is the largest asset manager, is likely to be getting it approved. So they manage 9.4 trillion. And there's other heavyweights like Franklin Templeton and Fidelity in the race. So it's expected to drive a lot of inflows into Bitcoin and further expand into crypto. And notably, it did lead to a rise in Bitcoin's price, like, in the weeks after the ETF application was filed. But then it slowed down. And funnily enough, the fake news in Cointelegraph of it getting approved sparked that enthusiasm of the recent rally, as people began to realize that they were arguably underpositioned, and that the high odds of approval of an ETF would mean that the prices would rise, like that fake news pump that happened, which is not too dissimilar to something that happened in 2021 when there was a fake news announcement that Amazon would support Bitcoin payments, which did not happen, but it did help bring interest back into the space. So I would argue that fake news announcement also had to do a bit with the recent hype that we're seeing around the Bitcoin ETF. Then let's dive into some of the fundamental metrics outside from narratives that we're covering. So one key milestone for Bitcoin is that it surpassed the 50 million addresses holding Bitcoin. Of course, not one address. One address does not equal one user exactly, but it's an approximation, and it's a very large milestone. And interestingly, it's been climbing, throughout the bear market without any major changes, whereas in the previous bear market, that really wasn't the case. So overall, it's a positive sign of adoption for Bitcoin. And we do see the initial patterns aligning with previous Bitcoin cycles, particularly Bitcoin hodlers, so addresses that have been holding for over a year. We see that group remain very high conviction. So they accumulated during the bear market in 2022 and through the early bull market in 2023, like they did also in 2018 and 2019 and 2015 and 2014 and 2015. So that's a very positive outcome that people, the long-term holders are still very high conviction, even after FTX and all the collapses of 2022, and have accelerated even further now that the ETF news have come. In terms of network activity, we also see active addresses reach an all-time high, which is, I would argue, an underreported metric. So this is from A16C's State of Crypto report, which aggregates a lot of the major networks, and they reached an all-time high in 2023, and it's significantly higher than the amount of addresses on chain making transactions on chain compared to what it was in 2021 and 2022. And that's overall a very positive picture for crypto in 2023, recovering from all of the headwinds faced in 2022. Now I want to dive into some of the key sectors that have been pushing crypto forward and how they have been evolving over time. So first and foremost, people focus on layer ones being the core infrastructure. And by layer ones, I mean not only smart contract platforms, but also Bitcoin and the base layer there. And the main trend here has been towards increased transaction fees. So a very positive signal in terms of demand. And here a key catalyst was ordinals. For those that are still not familiar, ordinals essentially introduced the capacity for one Bitcoin Satoshi to be treated as a non-fungible item. And that allowed the creation of NFT-like inscriptions, or as they're called, within the Bitcoin blockchain, and also later BRC20s, which are like the equivalent of ERC20 tokens, but on the Bitcoin blockchain. It began on Bitcoin in early 2023, and we see the first meme token mania within Bitcoin here, with already the token getting its first pump essentially, and a lot of BRC20s expanding. And it's since expanded to other chains. So Avalanche, for instance, and Litecoin, even Dogecoin have seen a lot of BRC20 activity, particularly picking up in the last few months. And Bitcoin has even surpassed Ethereum fees in a few days this year, which is something that had not happened at all in 2022. Then, of course, a standout player within crypto L1s has been Solana. And one of the reasons why it's appreciated so much, arguably, has been because it was also one of the hardest beat tokens in 2022. FTX, was notably a very large holder of Solana. And so as it collapsed, it led to a lot of panic, and Solana retraced more than 95%. So hit much harder than ETH and Bitcoin in 2022, but it has since climbed back about 600%. And TVL has increased by 5x. So I think there's a bit of an initial burst as that mean reversion from the panic happened. But then also the developer ecosystem remained quite strong and launching innovative applications that have been getting traction. Then FTX selling, liquidating their positions through Galaxy led to a little bit of FUD in the market, but that seems to have been surpassed. And more recently, in the past few weeks, we see Jito, the liquid staking protocol, do an airdrop that got a lot of attention because every recipient received at least $10,000 for staking just about $500 of Solana with them. And it has since led to the widespread adoption of point systems within the Solana ecosystem and more broadly as well. Then layer twos on Ethereum have also been seeing a breakout year in terms of adoption. Less so in terms of prices, but their metrics are arguably just as impressive. So layer two transactions for optimistic rollups have increased about 10x in 2023. We see record highs shortly after the launch in Base, making over $18 million weekly transactions. which is, compared to less than 2 million, that was a peak in 2022. So significantly higher levels of transactions in layer twos. That has also led to fees in Ethereum mainnet become a bit lower. We see less spikes above 100 Wei in mainnet, and a lot more activity moving to Optimism, Base, and Arbitrum. Arbitrum notably launched their ARB airdrop, their token, in March, which also led to high spike in activity, and more recently an incentive program that has led to 35% boost in their TVL. We see also, very importantly, the Optimism super chain get released, which is essentially a stack. So it's the Optimism stack being accessible for anyone to deploy their L2. So now deploying a layer 2 is very easily accessible and a lot faster than it was last year. And we have seen projects like Coinbase launch Base on top of it, as well as many others. And of course, Coinbase took advantage of their own existing users and the Coinbase wallet to be able to get quick adoption of the Coinbase Base layer 2. And not pictured within this graph, but equally as important have been the CK EVM layer 2s, like CK Sync, Scroll, Polygons, CK EVM, that have been progressively been rolling out over the year, as well as Consensus Linea, and are expected to continue growing into 2024. Then let's dive into one of the most important sectors in terms of crypto prices, and that is stablecoins. So stablecoins are a proxy to liquidity within crypto. Essentially, as stablecoins are growing, there is more inflows into crypto that are materializing within the main denominator in crypto. So most markets in centralized exchanges and decentralized exchanges are denominated in USDC, USDT, making it very important to have a large inflow of liquidity in order to push prices and make them hold. And in 2022, we see a very large outflow in stablecoin liquidity after Terra. This chart is even excluding Terra itself, so the total market cap of stablecoins was even higher. But it did lead to a lot of loss in confidence in stablecoins for over a year, where the market cap decreased by about 60 billion, from 180 billion to 120 billion. And it took until Q4 of this year, so the last few months, that it has been recovering about 10 billion. And we see a big shakeout within the space in stablecoins as well. So USDT's dominance, so the market share that they have, reached its highest since February of 2021. USDC got a lot of traction during the bull market and even in 2022, but it began decelerating quite quickly after the Silicon Valley Bank collapse, which held a portion of the Circle's holdings. So it did lead to a lot of redemptions from USDC. It had a brief depeg, which has recovered, but the market share continued to decline, and so far seems to continue declining, while USDT is now at over 90 billion market cap. So I believe that's like 70% of the market. Similarly, we see BUSD, so Binance's stablecoin, fade away significantly. It once was the third or fourth largest stablecoin, and given the Binance hurdles, it has declined significantly. We see DAI, so MakerDAO's DAI, recover. It growed about 50% this year in terms of market cap, especially accelerating after the introduction of the 5% DAI savings rate, which can be earned by holding SDAI. So MakerDAO has benefited from that real world asset adoption and giving that yield back to users holding SDAI. We also see they haven't gotten arguably mass adoption yet, but we saw Curve and Aave launch CRV USD and Go stablecoins, which are likely to continue playing a big role in 2024. And perhaps unexpectedly, PayPal has also entered the stablecoin race, launching PiUSD, which already has a few hundred million in market cap, and it's expected to continue to grow into 2024. I saw someone raising their hand, by the way. We'll we'll have questions at the end, so I'll just leave it for then. Now, diving into DeFi. As you guys know, we're very involved in the DeFi space. And it has recovered slowly throughout 2023. So TVL, I believe, is up about 20 or 15 billion, from 50 billion to 65 billion in terms of total assets deposited into DeFi protocols. So not a massive increase, but an increase nonetheless. DEX volumes as well have been increasing. So particularly during the meme token frenzies, we see a spike in those tokens. So there is a lot of activity picking up on chain, and in May, it actually, decentralized exchanges reached their highest ever market share relative to centralized exchange volume, which is also a noteworthy milestone. Loan demand has been increasing, particularly in Q4, with Aave and Compound seeing billions in loans being taken out from the protocols. And importantly, we also see sustainable yields expand within crypto, and like opposed to what Terra was. Now we have real world asset yield in the form of short-term treasuries and liquid staking yields that have reached basically mass adoption within DeFi. And that takes me on to the next part, which is real world assets. It was basically a non-existent space in 2022 and even more 2021. But we have seen Maker particularly pioneer the short-term treasuries that they were already getting yields on their USDC holdings. They were getting yield on, but now through SDI, they pass on that yield to the holders, giving a 5% benchmark, setting the standard essentially for stablecoin yields on chain. And we also see Frax launched their SFrax, 5% or more in the case of SFrax, slightly more, on chain, and USDM from Mountain Protocol, amongst others, that have been taking advantage of the high Fed interest rates and putting those on chain. There's other applications, of course, outside of treasuries, but that thus far has been the largest booster for real world assets. And they have also been integrated within DeFi applications like Aave, making it more accessible and composable to easily get yield on top of, treasury yields indirectly, amongst other applications. And I would argue that these are the equivalent to liquid staking tokens, setting the benchmark for stablecoin yields, just like the liquid staking tokens are the standard for ETH or any layer 1 token yield. And one of the key insights that we unveiled with our recent DeFi exploits dashboard is that the total amount of exploits in DeFi has been trending down. There is a lot of coverage on the news on like each individual hack, but in aggregate, this has been trending down, which is of course very positive news that DeFi is becoming more battle tested, more robust, and should be the basis for broader adoption into 2024. So it's still high. So over a billion was lost in 2023 to exploits, both economic and technical attacks, but it's significantly lower to what we saw in 2021 and 2022. So overall, from a risk perspective, DeFi also seems to be heading in the right direction. Additionally, we see the return of liquidity mining and airdrops coming into the space. Particularly in the last few weeks, we're seeing airdrops from large protocols like Celestia, Pyth, Jito, really getting a lot of steam. Earlier in the year, we saw Arbitrum, as I mentioned, and we see points-based systems that initially Blur introduced become the standard. Now even wallets like Rainbow are doing point-based systems. So it seems like incentives and airdrops are getting more gamified and have been thus far leading to an increase in key metrics and larger retention. So it has been spreading quite thoroughly throughout DeFi, and I expect it to continue to be the case. We also see liquidity mining make comebacks from a lot of the large protocols incentivizing, and yields overall in DeFi climb. Then we see NFTs resurge, particularly in the last quarter. So it's one of the main stories how NFT volumes have collapsed compared to 2021, 2022, where they were, 95%. Sorry, they've decreased about 95% from what they were in 2021 and 2020, early 2022. So they reached a bottom of about 3-4 million per day in volume compared to over a billion that was trading at its peak before. This is for Ethereum. And interestingly, we see Blur take the number one spot in terms of NFT volume being traded, surpassing OpenSea. We also see CryptoPunks surpass Bored Ape Yacht Club to retake the number one position as the most valuable NFT collection. We notably see Pudgy Penguins increase its floor by over 400%. We also see Bitcoin ordinals taking a lot of traction and at many days trading more volume than Ethereum NFTs, though I put an asterisk because this includes the BRC20 tokens. So it includes both the NFT-like inscriptions and the meme token-like inscriptions. So it's a bit not apples to apples comparison, though interestingly, in a more apples to apples comparison, Solana NFTs did reach about 75% of Ethereum's NFT volume. So we're seeing it spread out, NFT spread out across chains and become a bit of more competitive market across that metric. We also see another key sector was social fi, though arguably it didn't last too long. We saw the frantic breakout moment. It briefly became the most profitable crypto application with over, I believe, 200 million in annualized revenues for a few weeks. It has since declined, but it did show the potential that social metrics, social applications with financial incentives can have. It didn't reach arguably mainstream adoption, but it does act as a potential sign of what may come within social applications in DeFi, in crypto. And last but not least, of course, 2023 in traditional media and tech has been very focused on AI. So unsurprisingly, people began speculating a lot into AI tokens, especially after the ChatGPT release. It has been one of the highest performing sectors in terms of prices. So pretty much any AI token has at least doubled this year. Render, for instance, has increased by 700%. BitTau, which was just launched this year, over 1,000%. Also Akash, we see very high numbers. However, I would like to stress out as a cautionary tale that these are very much in the development phase. So arguably none of them have reached significant signs of adoptions. So it's highly speculative and they do have a lot of potential, though of course do your own research like with any token and asset covered here. But they tend to be very much on the early stage phases. So they haven't gotten as much fundamental growth as speculative attention throughout the past few months. So to conclude, crypto has seen a very large resurgence in 2023. We see a lot of the key sectors grow, the space pushing. We see catalysts like the Bitcoin ETF, Ethereum upgrades helping push crypto forward. And we hope that in 2024, there are signs that that should continue and potentially even accelerate. So that's it for today, guys. I see a few questions already. Make sure to sign up for the next webinar. We'll be talking about the evolution of risk in DeFi. So this is related to the dashboard we just launched, but also to a product that we're releasing in early January. So it's essentially a very deep dive of all of the metrics, what you can do to manage your own risk and understand the size and magnitude of how DeFi has changed and how risks are being mitigated across the space. So make sure to sign up now, guys. Thanks everyone for tuning in. I'll be sticking around for questions now. So I have a question here from Jorge. asking if you can use tokens of real estate as collateral in lending platforms. It's a good question. We haven't reached that point. The main reason being real estate hasn't really been tokenized at scale yet. And every real estate item is also non-fungible, whereas treasuries are fungible, like one are the same, it's interchangeable with the other. So far in terms of real world assets, only short-term treasury backed assets like SDI have gotten traction in DeFi, though I would expect into 2024 that expand beyond treasuries, especially as rates come down. Coinbase is pointing to a lot of emphasis in real world assets for Base. They also have the inherent advantage that they've KYC'd over, I believe, 50 million users that they have. So it's likely that real world assets will continue expanding beyond short-term treasuries and eventually into real estate, though that hasn't been the case thus far. I see a few messages about translations. I believe we will post this in YouTube where we'll have translations or like at least descriptions. So I hope you were able to get most of it for those that don't speak perfect English. Bruno is asking, what is my assessment on news such as this one from today, where Tether ranks poorly in terms of stablecoin stability? I have not seen that news article, to be honest, so give me a second. Even BlackRock mentioned it as a concern for a Bitcoin ETF. So let me go back to the stablecoin dashboard here. So I would have to check, to be honest, if the news just came out today, what they mean by Bitcoin, by Tether, sorry, having low stablecoin stability. In terms of prices, USDT has actually been the most stable this year. USDC had the Silicon Valley Bank collapse, which decreased significantly their market share and also led to a depeg. In terms of volumes, it tends to be the number one in centralized exchanges, and in decentralized exchanges, it's catching up to USDC. I think Pi USD might be a contender for like the regulatory aligned stablecoin into 2023. And I know that a lot of the pushback from the SEC against crypto has been tied to stablecoins, though I believe, and it's my personal opinion, that Tether is actually doing a better job than most people give him credit for in terms of being able to handle billions of redemptions without problems and becoming increasingly transparent over time. Saeed is asking if that why I didn't mention DEXs, if I'm not positive about them into 2024. And I did briefly mention them in this slide within DeFi. I know like DEXs is like one of the largest parts of DeFi. So decentralized exchanges did have a moment to shine, particularly in May, when they reached an all-time high market share relative to centralized exchange volume. So they reached 25% for the first time ever. So I think there are some positive signs within decentralized exchanges. You are asking also about DYDX, which just launched their DYDX V3 a few weeks ago. That's more for derivatives trading. Derivatives thus far haven't reached as high of a market penetration as decentralized exchanges in spot markets. So I think it's one of the signs that have like one of the areas that have a lot of potential for 2024. But thus far in 2023, derivatives have not broken out as much as decentralized exchanges in spot have. All right, I have time for one more question. If you guys want to go for it, I'll give you about 30 seconds. And if not, thanks everyone for tuning in. All right, I guess we'll call it a day. Thanks everyone for tuning in for this one. Hope you all have a great day and fantastic holidays. See you in the next one. Bye.